Hello, happy Sunday. I hope you all had a great weekend. It's that time where we go over the watch list for the week. So to start, we've got quite a few commodities. You can see we've got gold, we've got oil, we've got copper, and then we've got primarily GUSD pairs here. We've got the Australian dollar, euro dollar, pound dollar. The only outlier really is the pound Swiss. So we'll go over all of those and hopefully you can get some insights into the week coming. So to start off, we'll go over oil. So we've got despite long-term optimism, Brent oil faces short-term downside risk due to projected supply surplus and a weaker demand from China. Goldman Sachs forecasts a gradual decline in oil prices as supply increases from US, Brazil, and OPEC plus countries. Additionally, global growth concerns, particularly in China, could further weigh on oil prices. So you may have noticed that oil has been on a pretty steep decline over the past sort of week, and that was due to production, essentially. So what we're doing is looking on Brent oil because there is quite a nice market gap here. So essentially what we do with market gaps, we can either look for them to get filled or we can look for a continuation in the direction of the gap. In this situation, I do foresee the gap getting filled because normally we don't see them get filled sometimes with stocks and indices, whereas with oil, we often do see them get corrected or get filled rather quickly. So in this situation, this gap lines up with this 50% level really, really well. And as you know, the strategy we sort of trade here at Elite Traders quite commonly for swing trading is this fib level. So we'll look for this 0.618 to the 0.5 pullback. So we're looking for this to get sort of retested along with the gap getting filled. And this would also be a break and retest of this structure. So it looks like a very, very straightforward trade. Really, the economics are in our favor. Now, if we also have a look to further to the left, really, we've got these lows over here that could act as sort of target one, TP1, whatever you really want to call them. But what we would need to see is for this current low to get broken. So if we start coming back down into this level around the 71.18 and we start rejecting back to the upside, you may want to trail stops to break even or even close out and secure profits because, as I said, you know, this looks like a very major level and our take profit would really be in sort of no man's land. The last time this was touched was back in November 2021. So this could be quite a nice opportunity to get a trade and then maybe even get a long position off this support, creating this higher time frame sort of double bottom pattern. So moving forwards, we have the GBP USD or the pound sterling against the US dollar. Now, this one should be quite obvious for anyone that watches my streams or content on a regular basis. But what we've recently had is the Bank of England holding their rates at 5%, and we've had the Federal Reserve cutting by half a basis point, so 50 basis points. So that already leads to a really nice central bank divergence to basically drive this trade to the upside. If you want access to profitable signals with professionally written trade ideas to back these trades up and to learn real trading standards with technical analysis and geopolitical and macroeconomic education with our videos and PDF resources, live webinars, and our proprietary research documents sent directly to you, then you can join our private Discord at elitetraders.io. Anyway, back to the video. The other factor for this trade as well is that we don't have any signals from the Bank of England that they will be cutting rates. You know, it would be more a case of if we start seeing negative data that does signal towards a rate cut, then fine. But at the moment, we don't have that. And we are still hearing talks of the Fed cutting again by another 50 basis points in November. Which again would be quite aggressive. So we just had 50, and if we have another 50, that would be a 1% decrease in the space of two cuts, which again is quite aggressive, and it would help drive the pound USD to the upside. So overall, we're following this trend that we can see. We've had a very clean rejection of this trend line. We've got the fib here, looking for this 50% pullback level, along with sort of the retest of this structure. So technically and fundamentally, pound dollar is a very high potential trade, we should say. Now, next up, we've got copper. Copper is benefiting from strong demand related to global electrification and industrial growth. Despite short-term concerns, long-term demand for copper remains robust, particularly as the world transitions to renewable energy and electric vehicles, which are highly copper dependent. I mean, it doesn't take a genius to look at copper and say we're in an uptrend. You know, we were stuck in a range essentially from 2023 into 2024. So we've had a year-long range. Previously, we broke to the upside and very quickly came back to the downside. And now it looks like we might be having a repeat of history. So I would really be looking for the long term, another reach at this peak. So around the 5.14 level. So somewhere around here, and again creating like a double top, almost like the double bottom we saw in oil earlier. The problem is with copper, recently we've not had anywhere to really get into this trade. It's been on a rocket to the upside. So anyone that wasn't already in this trade has had a very hard time, executing. So essentially what we're looking for is just a very simple 50% pullback, as I mentioned before. We can see that price currently is on this daily level of resistance, and we did close out the previous H4 on Friday quite bearish. So this could be quite a nice sign that we could see a small correction. We may not get the full 50% move, but I will be executing and trying to catch into this trend at some point next week. Moving on to the pound Swiss, we were in this trade last week actually. We executed right after the Bank of England decided to hold their rates. The problem was, we very quickly saw this move start getting corrected back to the downside, so we had to close for a very small loss on this one. However, the trade idea is still more than valid. We just cut the loss early to maybe get in at a better price. So what we've got here is, despite the UK economic challenges, the GBP is expected to gain strength against the Swiss franc. The Bank of England is likely to cut rates more gradually compared to the Swiss National Bank, which recently cut by 25 basis points. The SNB, so the Swiss National Bank, easing and strong Swiss have reduced inflation pressures, but further monetary policy easing or monetary easing could lead to Swiss weakness. Additionally, the safe haven demand for CHF is starting to warn as global risk appetite improves. Essentially, we've seen a large risk-off move in the markets over, it was kind of past now, but we can see on the yen, when we had the unwinding of carry trades back in July, we did see the markets go heavily risk-off for a very short period, and that has still weighed on the markets until very recently. And of course, that risk-off does also weigh into the Swiss. Now, the Swiss National Bank also views the Swiss as overvalued, so we could expect the Swiss to start weakening along with the other factors I just mentioned, and again, the central bank divergence that we've got here. So looking for this 50% move back to the downside, as we basically already are here. So we'll be looking to execute on Monday if we can see the entry criteria get met. And we can see the entry point here is perfectly lined up with the previous sort of resistance when we had this sort of descending range, if you want to call it that. So yeah, target back up to the 1.15, which is the negative 0.68, negative 0.618 level, which again coincides with quite simple market structure throughout here. So again, this trade should be relatively straightforward as long as we can get the entry. Now, euro dollar is a little bit of a contrarian idea because we're looking to really short the euro dollar. This comes because the Eurozone is struggling with a weak growth and inflation concerns, which are likely to force the ECB into further rate cuts. The USD, on the other hand, is expected to remain strong due to US economic performance or outperformance. The Federal Reserve rate cutting cycle, which is projected to end sooner than the European Central Bank. This widening policy divergence between the Fed and the ECB makes Euro USD look like a solid short opportunity. Personally, I'm not sure how I feel about this. So the reason that I just read out is actually from the bank reports. However, if we look at euro dollar, it's been on a heavy run to the upside. Although, as I said, Eurozone data is weak and it is likely that we will see a European Central Bank cut, I'm just not 100% convinced that this is the right entry. Although if you were going to go short, this is probably where you would want to start looking to do it. We can see we've got the weekly time frame here. Really strong level of resistance that we are currently at. And last week's weekly candle didn't manage to close above. We actually didn't really do anything last week. It was just sort of up and down and closed as a sort of doji candle, I think that's called. So yeah, if we start seeing sort of a move to the downside, we saw sort of a curve and we see rejection continuing here, and then we start seeing maybe a lower low get formed. I may take a low risk attempt at shorting euro dollar, and we can see how that one goes. Now we've got a very similar situation here on the Australian dollar, or the Australian dollar against the US dollar. The Australian dollar is facing significant headwinds from China's economic slowdown, which is a critical trading partner for Australia. Despite stimulus efforts from China, there are doubts about the effectiveness of the measures in spurring demand. Additionally, Australia's inflation is within the RBA's target, reducing the likelihood of aggressive rate hikes, further weakening the AUD. The US dollar is expected to remain strong in the near term, supported by its safe haven status and US economic resilience. Again, as I said with euro dollar, we are stuck at this weekly level of resistance. Although we didn't see much selling pressure come in here, we haven't managed to close above, and we have just crossed over this 200 moving average. So it'll be interesting to see if we can end up closing above next week, or if we close below, that would be a nice signal to sell. So if we do close below, that would also be a rejection of the 200 moving average and also a break of this trend line that we're seeing. So technically, and maybe fundamentally, again, I'm not 100% sure that I really want to be going in short on this position right now. But again, as I said on euro dollar, if we start seeing maybe lower lows get formed and we see sort of a curve to the downside, I may take, again, a very low risk stab at going short and see how it performs. But we may see a pullback that I don't want to get trapped in down to this trend and just see a sort of a natural pullback before we go higher. So we've got to be very cautious on this one. And lastly, we have got gold. Now, I think everyone's eyes are on gold at the moment. We're just creating new all-time highs, it seems like, on a daily basis, really, on gold, which is a little bit frustrating because if I just held the position I had on gold, it would have been a rather large money maker. But unfortunately, we didn't quite manage to catch that one. I mean, the global factors behind gold, or the market drives, are still there. So we can see gold is benefiting from safe haven demand amid geopolitical tensions and expectations of further central bank rate cuts globally. As inflation concerns ease and interest rates fall, gold is likely to continue its rally, particularly as it provides an attractive hedge against uncertainty in global economics, or the global economy. So my target on gold is still 3,000. I think we can get there within the sort of the next 6 to 12 months. The problem is I really want to trade into this 3,000 level, and we're not seeing much of a pullback here. You can see all the levels I've got drawn out here where I would be willing to get into a position. However, we're just not really seeing any pullbacks. You can see we had 2 bearish candles here, or 2 bearish days, followed by a very bullish day and a breakout to new all-time highs. And sort of this week, or last week, we essentially just consolidated for 3 days straight. So really what we need to see is the week coming up. So if I pull this up here, you can see that we have quite heavy news coming out. So we've got ISM manufacturing, PMI, we've got JOLTS, we've got ADP, we've got NFP, we've got CPI for the Swiss, actually, and unemployment claims for the US. So with all the market moving news coming out this week, it does present quite a strong opportunity to see gold drop to allow some entries. We may also see some profit taking on gold as well, because it's very, very expensive at the moment. So it wouldn't be a shock really if we do start seeing gold push to the downside, as we do see larger market participants taking profits, and then possibly re-entering at lower prices. So yeah, gold's definitely one to watch. It's just a case of, where and when. Unfortunately, no one can really tell you that. So guys, have a great week. Don't forget to like and subscribe if you've gained some value from this video. And I will see you later. If you want to join the Discord, there's a link in the description. I will see you shortly.